That's how people lose money in the share market. So 2 things you can do against that. If you're leveraging in the share market, who thinks it might be a good idea to insure your shares? Raise your hand if you think that might be a good idea. Does everyone who always follow good ideas though? Yes or no? No, many people don't. However, do you insure your house? Yes or no? And you say, well, I've spent the last 20 years insuring my house and it hasn't burnt down yet. I've wasted my money. Or do you go, you know what? I've had peace of mind. Because that 1 year it does get burnt down, that insurance has been very worthwhile. That's attitude I'd suggest you have in the market. It's up to you what you do. So the 4th thing is you can actually insure your shares. Now, many people do not know about that. So uneducated investors are missing out on knowing this. So you can insure your shares and protect the downside. Who would be more excited about shares knowing you can do that? Okay, far more exciting because you can have protection. Now, do I have to ring an insurance company and arrange that? No, insurance companies don't insure your shares, okay? So number 4 is insurance. Number 5, what we can do is we can make money when the shares actually go down. And all we're doing is what I'm going to go through in some detail with members afterwards, is that on the way down strategy, we're insuring shares predominantly to protect ourselves. But we can also profit. That same insurance that we take out to protect ourselves can actually make us a profit. That is a really big thing about insurance that many people aren't aware of. So when the market goes down, you can make a lot of money from that insurance. And that's exciting, okay? Once you know how to do that, very exciting strategy. So what you can actually do is you can start combining many of these strategies together once you know them, and you can start outperforming the average person. The average person out there is fearful because 1, they don't know they can insure the shares. Or 2, they don't know that when it goes down, they actually make a lot of money if they know what they're doing, okay? Number 6 is what we can do is I call the way up and the way down strategy. That's where you can make money on the rise and up and down in the share market without actually owning the shares. And that's commonly known as options trading, like what I use the example my brother-in-law does. That's another complete strategy that requires technical analysis, requires a lot more training. These other things are quite simplistic and can be done with a lot less training. That doesn't suit everyone and there's a higher degree of risk with it. Okay, but some people, the idea of not having to buy any shares but make money by trading, sitting in front of a computer a few hours a day, some people love that because they think it's better than a job. Okay, I don't love it. Why? Because I don't like sitting in front of a computer, and for me, it's not for me. Okay, so but I do the other stuff. So number 7 strategy is what we can do is renting shares. There's one strategy, so you can rent shares. Most people, as we know, don't know that you can rent shares. And number 8, what you can do is you can sell insurance. Not just buy it, you can actually sell it and make money. And number 9, what you can do is combine. Combine this. You can combine them all together. And by combining them all together, you can actually seriously outperform other people. In this current market, if you're doing this combination of things, you'd have the opportunity to profit immensely. Okay? Why? Because you have knowledge that other people don't have, and you have a psychology where you're not fearful, you're prepared to act. Make sense? And so the more knowledge you have, the more certainty that you have, the more capacity you have to profit. Does that mean, Jamie, that just because I get a financial education, I go to financial seminars, that I'm guaranteed to be successful? Yes or no? No, unless you come to mine, of course. Okay. No, there is no guarantee. But is a common sense dictate, if you have a financial education, you're taught, you understand, does it increase your chances of being successful? Yes or no? And does it decrease your chances of doing dumb things? Yes. So that's what common sense dictates that. And as a result, people are able to outperform other people. Make sense? So let's look at some detail. Let's go into, say, renting shares as an example, and then we'll look at combining some of those things. So for those who are brand new to this, you can start to get your head around it. Let's use an example of, let's say, draw a line down your page. This is you here. And I'm going to put my brother-in-law's name, Simon, over here, because many of you will have a question, well, Jamie, if you rent out your shares, who's going to pay your rental? Well, there's going to be people like Simon, traders in the market, that will do that for you, okay? XYZ share, let's just imagine a share. Let's not use any real particular shares. Let's just imagine. Now, if you're going to rent out shares in Australia, what's the minimum amount of shares you must have? A minimum of 1,000 shares, okay? So you'd have the minimum of 1,000 shares to do this on. So if you have 700 Telstra shares, You're going to have to buy more of them to be able to do it. Can you rent out every share, yes or no? No. Only certain shares you can rent out. Generally, it'll be the larger companies, the top 20, generally. Some outside of that as well, but generally it's the larger companies, okay? So you can't rent every share. Now, in America, you can also do this in America, okay? So if you wish to do it in America, I know some of you are, in America, you only need 100 shares to do it in, okay? So you need less shares. They have one contract in America, it's called 100. In Australia, you need 1,000. It's just small differences. So you can do this in Australia and America. It's up to you where you do it in. I predominantly teach people to get started in the Australian market, but that's really up to you. Okay, so let's say we own 1,000 shares, or we've decided to go out and buy 1,000 shares, and we bought those shares, say XYZ, at $16. Okay, so that's cost us 16 grand if we've got 1,000 shares, or 160,000 if we've got 10,000 shares. And then let's say we bought them at 16 because we think it's rising, and the share price has maybe gone above 16, and we, for the month of November, let's say we're halfway through October, so we're a little bit late for October, we want to rent them out for November. Okay, so we might look and say, we look it up, we taught how to find the shares, and we look it up and realize that you can rent out the shares at different prices. Okay, and you decide, and you look at the prices and you find out that at $17 it's offering 44 cents. Okay, so you decide and you select, for whatever reason, you decide you're going to rent these shares out at $17. You can rent them out at whatever price you want. Generally, the rule is you're going to rent them out below the price you bought them at or above. If you're not sure, the answer is in this session. If you're not sure, just nod. Okay, most answers are yes. Okay, you're going to rent them out above $17. Oh, sorry, at $17, above what you paid for them. That's as an example. You just don't know. So if you rented out these 1,000 shares for the month of November, 44 cents a share. Let's say you own 1,000 shares. How much have you received? You received $440 into your bank account via your broker. Okay. If you had 10,000 shares, you would receive $4,400 for the month. That's your money up front for the month. Just like you had a property, you've rented out for the month, holiday rent, you got money into your pocket, that's yours. Your money to keep. It's like getting a dividend every month. Imagine that. So it's additional revenue that you've picked up. Why are we doing this? You don't have to rent shares, but why would you do it? One reason you would do it if you're after cash flow. It's a cash flow strategy. Now, if you're after capital growth, you can just do a different strategy, or you can combine them, okay? So what you can do, it's up to you what you're looking for, how you can combine these. So number two thing is, Jamie, what happens though? Some brokers will say, oh, be careful doing that strategy because your shares may be sold. What they mean by that, if the share price, say at the end of November, it's gone above $17 and it's now above $17 at the end of November, your shares could be what? They could be sold. If they're sold, at what price will they get sold at? They'll get sold at $17. At $17. Why? Because remember this is the way it works. Whatever price you rented them out at is the price that will be sold at if the share market goes up, the price goes up above that. Make sense? Why? It just is. That's how it is. Okay? So they get sold. But what happens if you bought these shares a month or two ago at $16? They've been sold at $17. How much per share have you just made? $1. So you've just made $1 per share profit, sold at 17. So 1,000 shares, you've made an extra $1,000 before brokerage. 10,000 shares, you've made an extra $10,000. Now, once again, if you're bought a stock and you're saying, I'm happy to buy this at 16, I think long-term it has value. I think it's going to be worth more than that in the future. You're not particularly worried about short-term price movements, okay? Because you're buying a business, you're buying an asset. So if you thought it was going to drop, you probably wouldn't have bought it. You might have waited. Or you say, you know what, it can go up or down. Long term, I think it's a good buy. So let's say at the end of the month, it is down to $15.50. You bought it at 16, so on paper, you've just lost 50 cents on paper per share if you hadn't rented it out. But because you rented it out at the beginning of the month, you got 44 cents, correct? So 44 cents less 50 cents, how much on paper have you actually lost? Only 6 cents. So in this case, by renting it out, you've generated extra revenue, so you're actually better off than if you didn't rent it out. Does it make sense? So on paper, you've lost 50 cents, but you've got 44 cents up front beginning of the month. So effectively, you've cost it out.